Yo, how you doing? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I am an economist. I am a trader. I am passionate about what we do, all things global macro, in particular Forex, futures, commodities. It's all good, my friend, because it's money. Whether it's gold, oil, Bitcoin, or dollar. Hey, it's all money, honey. And what we want to look at is the circular flow chart of money as it goes around the world based on supply and demand of economies. So anyways, while we're here, we're going through the charts, probably look at gold, oil, and Bitcoin and dollar pairs and yen pairs. But really, whatever you want me to cover, I'm happy to do. I suggest we start with the currency indices and then go through all the stock indices around the world. That's what I would do if I were me. But let me know, just ask in the chat and I will do my best to help. Also, if you look in the description below today's video, you will see a link to my book, Strategic and Tactical Forex Trading. Please click on it and leave a review. I'm assuming you already own it. The second thing is there's a link to fxbootcamp.com, the community I've been leading for 20 years. Yeah. And over the 20 years, we've gathered lots and lots and lots of amazing training and support resources. It's $88 a year. Swing on by, you'll get more value than $88. Trust me on that. And then also, there's a link to tradersway.com, a trustworthy, ethical foreign exchange broker, fast execution, speed, narrow spreads, huge swaps. But most importantly, someone that I recommend because they earn my loyalty and respect. They're good people with a good business model. Tradersway.com. And here he is today. Let's see. I asked you to complete a poll. Could we get a few more people to do the poll? FX chainers and earn as you learn. Hey, Wayne, great work there. All right, thank you. Thumbs up. Great. Let's see if we can get a few more people to vote. What I'll do is I'll just let the poll sit there, and I'll go through the indices while you guys do that. Oh, yes, Ed. Thank you for those that are trying to connect me with economists in Cuba. I have a meeting set with a foreign exchange and macroeconomic expert in Cuba. So I got that meeting set. I am looking now for a professor of economics. Probably the how do you say Universidado de la Habano. Yeah, so if you know somebody that might know somebody that might know somebody, I'd like to meet with someone in education, but specifically education economics. Hey, Aaron, I got your email. Email me again right after the meeting. Keep it on my mind. Sometimes I move. I move and I forget to go back. We'll figure out what's going on and get you taken care of. Okay? Yeah. All right. The poll is complete. Let's take a look. And a skewed distribution, but that makes sense, right? We have a fat tail on Forex. The split stock, energy, metals. Makes sense, right? Based on our community. Cool. Right on. Okie dokie. So this is a little bit more sensitive indices, and it shows sort of a mix. Really almost everything is down except Swissy, right? So one of the things we could do is go to sort of longer dated indices. And you can see US dollar is still quite weak compared to where it was way back in, I suppose this flipped around late September. Okay. Japanese yen's got some strength in the last couple of weeks. Great. CAD is still dirt cheap. Pig has gone everywhere. The great big pig went from super bullish to super bearish. Of course, this is based on technicals, right? Has anything actually fundamentally changed in the UK? No. And that's the difference between, I'll say more institutional style investing. The big rally doesn't fool an investor because they're not making decisions on a chart. So if it's up and you're a bear, you're like, okay, not at this price, but maybe soon. So I got a lot going on. Can't wait to get all of it done so we can keep doing more things. Isn't that funny? It's just in my mind. I don't even know why I blurted it out. Just it's on my mind. I got so much to do. Anywho, check this out. Kiwi up and around. Swissy up and around. So you can see, like, even in the medium term, like, look at Swiss franc. We really haven't done much of anything. Aussie's still giving back. Look at the series of lower lows, lower highs, lower lows, lower highs, probably another lower low. You might stink. Yen all over the place. Okay. And of course, we should all know and be cognizant of the fact that we have 30% of normal volume. Volumes like this right now. We have very low volume. Let's take a look at the stock market. Ba-bum, 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 ba-dum, ba-bum. Or is it this? Ba-bum, 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 bum, 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 bum. All right, let's look overnight. Bump up the volume, bump up the volume. Damn. All right. Okay. An up day in Hong Kong. You can see that we got a top, maybe another top. Be very interesting if this holds because it's quite different from what's going on in the rest of the world. Okay. Much different from what's going on in the world, but maybe they're benefiting more directly from reopening policies in China. Could be a rabbit, could be. How did Europe do overnight? Big fat nothing, but still not up. It's almost like I got to adjust this resistance. Well, in this case, was resistance now support. Should I adjust it down? I feel like I'm fitting it there. But notice that we're on the pivot point, the next pivot point. Okay. And I don't know. Maybe Europe benefits more from China reopening. Maybe this is the bottom. Huh? Maybe this is the bottom. If things are good, we're so sure there's going to be a recession everywhere, right? We're so certain. Everybody's so certain. But wouldn't it be interesting if this ended up being the bottom and somehow Europe does better this year? Well, it would have to be with China. Right? But I don't think that's the technicals we have now. But look. If you're a technician, okay, you can treat this as a higher low. Don't you think? Okay. The next kind of spot is in here. Okay. So that could kind of be your zone if you wanted to be just a pure technician and you're like, okay, how about, and somehow you're kind of form fitting annual pivots, monthly pivots, weekly pivots, your cycle, all this kind of stuff. Yeah, if you're a bull. I think there's a lot of downside risk, I think there's a lot of downside risk. But this is why we do technical analysis to confirm and deny all of this. Germany looks like the same dang chart as the euro. Okay, looking at Germany. What, this way? Okay. What are we going to look at? This and this and this and this. Drag that over. Okay. And of course, you do have to play this, which we're already on. But the thing is it technical or is it fundamental? And I think the risks, of course, makes it look like this. And I think actually, because one of the things you do in graduate school as an economist is you're not just doing supply and demand charts. You're calculating the slope. So you could have a demand like this and a slope like that, nearly flat, right? And now you're calculating slopes of the demand and supply curves, and that's where things get complicated. So applying that principle here, not only do I think that in direction and shape, but the slope would probably be more like that. Like it could be a wicked first 10 weeks, let's say. All right, here's the S&P 500. Okay, now we're back to America, or should we do FTSE? I guess we should round out. Where's my FTSE? Here's my FTSE. Okay. FTSE doing quite well on this time frame. Technically, this is bullish, and what's interesting is, holy smokes, did it kick off of that level, huh? So now what? Well, I guess you got to play the top. Okay. And what does that feel like? Risk on? Really? Wow. But it is bullish. Meanwhile, the pound has underperformed, huh? So maybe that's a change of direction. I don't know. Maybe we can go out further, go all the way out to the daily. Now, we talked about this a couple of weeks ago, so maybe it's a good time to revisit this idea. But this predicts some sort of top in this zone. So if I was a bear on this sucker, and by the way, I am a bear, this would be perfy. Perfy! Okay? Perfecto! What do you think? Whoa. Man, don't do that. That's screwed up, huh? Tired, man. I don't know why. I don't know why she swallowed a fly. All right. So anywho, This looks much more straightforward. This is going in the direction I absolutely, totally expected, as you can see. Now, I did revise this a little bit because I had it up and then down, so I've fitted a little bit here, but not in a meaningful way. But the prediction has always been down. And that's that. I think someone's already got their play on. Okay. Remember, 4,107 was the predicted high for the year. What year? 2022? No, we're not looking backwards. We're looking forwards. Okay, the top of 2023. And I think if we're lucky, in December of next year, we will be back around 4,000. I think it's probable, or not probable, but likely, let's say, we drop somewhere on best case scenario, maybe like this. Worst case scenario, maybe like that. But anyways, we'll get into that. So, boom, boom. Oh, yeah. Okay, so anyways, when we look at that on a smaller time frame, let's zoom in here. We are kicking off support yet again. So on the short run, that's probably, sort of a risk on play. But don't be shocked if this is just sort of an open and you go like this. Wham! In the next couple of hours. Okay? That is weird grind. Look at Nazi, huh? Nazi, same idea. Okay, somewhere in here is the sell zone. Hey, Tony, where do you sell the Nazi? You sell it at the Salzone, Luigi. You sell it at the Salzone. See, that's the sell zone. Well, if you're trading Nikkei, you're basically trading against the Bank of Japan, right? So, I don't know. All right, so there's the commodities. What would you like to do next? Or, the stock indices. What do you want to do next? Commodities, exotics, dollars, yens? What do you guys want to do next? Oil! Okay, well. All right. Up, down, double top, lower low, lower high, lower low, lower high, lower low, lower high. What do you think? Maybe a lower low today? What's the target? 75 or 70? Yeah. Well, grind, it could be something just as benign as, not many people trade it. And you're trading it at the worst time of year. So let's say it's a thin market and you're trading it during a thin market and there's just nobody in the liquidity pool. Grind. They might be technically a valid trade, but could just be fundamentally just a really dumb trade. I don't mean you're dumb, but I'm like, a thin market during a thin market is just not going to trade well. Oh, yeah, the outlook. Oh, yeah, thank you. Man, I didn't invite anybody yesterday. Let me get that for you. I'll need a second here. Yeah, I'm going to do a 2023 outlook. And you don't have to be a member of FX Bootcamp. You don't have to be a member of FX Bootcamp. So how do you get in? What's the requirement to get into the 2023 outlook? Does anyone remember? If you don't have to be a member of FX Bootcamp, then how do you get in? How do you become one of the Illuminati? You bribed me. That seems fair. That's how the world works, right? So I found it. Here it is. Yeah. So I might spend 10 or 15 hours okay, so there you go. 3 chords and the truth. The rest is up to you. Yeah, I'll probably spend, I'll spend 10 hours. So you're contributing $1 an hour. Sweet. It's one of those things too. If it's not worth it to you, great. Sweet. Cool. Yeah, Grind says, yeah, okay, I'm listening. Yeah, I get it. It could have made a lot more. Yeah, that's the thing. You're only in control of what you can control, but the thing is, here's where people get tripped up, I think, especially sort of retail traders, right? You look at a chart, and a chart is a chart is a chart is a chart is a chart. Oh, yeah. Doesn't it say that? Doesn't it say it on the page? When is it? Doesn't it? Yeah. Wednesday, January 4th at 4 p.m. Yeah. So that's the thing, right, Grind? If you get accustomed to technical analysis, then what happens is you start looking at patterns and you're like, is there a pattern here? 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 And a lot of the time, that's okay. A lot of the time, that's okay. But we all know then something changes and you get blindsided. My time's not free. Okay? That's it. Why can't you do it for free? Because I'm not free. Okay? If 10 hours of my time is not worth $10 to you, I'm not going to share it. That's all. So the trick or the trouble is we don't look at XAG and XAU and Brent and WTI and the S&P 500 and Bitcoin as actual stuff, and you're just trading patterns, and they work fine until they don't work fine, and over the course of time it doesn't add up to a hill of beans, right? Instead, what I want to teach you is gold is actually a thing. You know what I mean? We forget that it's actually a thing, that it's a real thing. There's real supply, there's real demand. And not just a random pattern. And so that's where you can get where you see a pattern and you just boom, you throw down a trade on Nikkei, but you don't realize that Nikkei is a thing. There are buyers, there are sellers. Maybe there's a lack of buyers and a lack of sellers. But it's a thing. And then all of a sudden, how much liquidity does it normally have? How much liquidity is there now? Is there going to be an opportunity to get in quickly and easily and cheaply and get out quickly, easily and cheaply? They're not just pretty little colors on a chart. And so, Grind. So you had a great technical trade and it didn't work out because, there's a lot more to it than just the pattern. And so you got to you got to be careful. And technical analysis alone can get you into trouble because it looks like it makes sense based on almost like backwardation of your analysis, based on what has been happening. You're trying to make a projection of what's going to happen next, which much of the time is pretty good. Okay. Rajneel, you're offended by the $10? All right. No, it's okay, but I don't know. I wasn't going to do a thing, and then people asked for it. But so I will spend, Rajneel, time on my vacation, basically. I'm look, this is holidays. Nobody's trading. This is technically my vacation. This is my holiday time, right? So I'm going to spend that developing a presentation about stuff I already know. So, right. So I'm giving up my time. I could be doing nothing. I could be doing something. I could be spending time with my kids. I could be spending time with my wife. I could be writing my book. I could be traveling. But instead, I will sit with a laptop and bust out a power presentation about what I think the future is. But I already know what I think the future is. But now I have to go back and prove it. So I don't know. No, but if I made a mistake, and Rajneel might be right, I might be making a mistake. It makes me look cheap. I should have charged $100. Anywho, let's move. So let's go back to gold here. And, we can see that there's a plan A short, as you can see, and it's been there a long time, and we're looking at this. Okay, that's called strategy. Okay? That's called strategy. And what we're looking now for is tactics, which is the next part. And even though there's a plan A to short, when you look at tactics, which is technical analysis, okay? You know what I mean? It's that this chart, okay, has been bullish since this time frame, which is, we'll call this November 5th. Okay? So here's how you do strategy and tactics, right? Yeah, guys, don't beat up Rudge-Nail. It's fair. It's a fair criticism. Right? All right. Yeah, Greg. Yeah, imagining Greg. Okay, so look, strategy here. The strategy says, based on nothing on this chart, strategy has nothing to do with chart. Okay, we want to sell. At what price and what time do we sell? Is the tactical. Okay, I have some ideas for price. Based on monthly pivots, it looks like somewhere between 1804 and 1824. Okay, but we've known that for a while. Are we in that price zone? Yes. So the next question, because that's just price. So this is the price in here. I'd like to sell somewhere around here. Okay? So that's step one of tactics. At what price should I consider? Now, you're like, but how do you figure that out? Well, if I'm a bear, I can only sell at resistance. If I'm a bear, I can only sell at resistance. So at what price? Well, at resistance. You're going to have to analyze the charts and figure out where's the nearest level of resistance, where's the next level of resistance. Okay? All that kind of stuff. So the first part is price. The second part is time. Because that's all this chart shows me is price and time. Okay? And so to clear this off a little bit, I cannot sell this based on my rules of engagement until the 21 is below the 55. So if it hits, let's say, 1825 and then drops and makes a lower low, it's going to do something like this, right? Let's draw this out in orange. Let's say we get this up, this down, this up, this down, this up, and then what? Down, 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 up, up, and I'll probably sell somewhere in here. And then expect a down, 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 up, up, and probably another sell. Okay? So that's the strategy. Plan A short is only a strategy based on information that doesn't even live on this chart. The chart only is useful after you have a strategy. And then when I open the chart, I look at my tactical entry of my strategy. Do I sell now? No, it's bullish. Why would I sell in a bullish market? What am I, stupid? What the heck? Mama didn't raise no fool. Huh? What kind of moron sells in an uptrend? A broke. Right? You're either a bull or a bear or you're a bat. A broke-ass trader. So anywho, yeah, we're at the right price, but now's not the right time. Okay. You see? It's good to have hard and fast rules. Okay? No matter what you wanted to do in this time frame, do you understand? There's one thing that is certain. See, what's not certain is, should you buy it now? Should you buy it later? Should you buy it now? Should you buy it later? Should you buy the higher low? Should, all this kind of stuff. Buying or not buying is the uncertainty. The certainty is you can't sell it. There's nothing inside this window that is sellable. Oh, but Wayne, if you sold it up, no. Oh, but if you did, no. Okay? Okay? Well, if you sold it now, you're a liquidity event. See, I think bulls make money and bears make money. And everybody else is a liquidity event. Okay? Yeah, still, I'm chuckling at Greg says, you got to be kidding me. Do you know how much time and money I've spent learning the markets over 4 decades? Yeah, hey, Greg, even if it was $1 an hour, let's say your time was worth $1 an hour, it's $1 million, right? At some point. You have $1 million worth of value, bare minimum, if your time is worth $1 an hour, right? So you're like, huh? And right? All right. So that's your gold, WTI. Yeah, well, look, yeah, we're at the bottom of the range for my WTI. So we'll see what happens today. Okay, we'll see what happens. The thing is, I don't bet that it's going to reverse. One thing that I teach is the trend is going to stay forever and ever and ever and ever and ever and ever until it ends. Okay? But look at look at the channel that I drew. Remember, I drew this to explain the math, if you recall. You remember this sort of zone? Like, look how helpful this is. To predict, I guess it's not even prediction, to understand, for example, the price relative to, I don't know, can we say value? I guess value is not right, but, the mean is here. And to the upside, we can see when we get into this price level. Okay. So remember, this has to do with variance. Okay. This has to do with variance. Price tends to revert back to the mean. So like we're in this zone now, and even though it's been down for days, it doesn't make it bearish. Not yet, not statistically. Now you might say technically, okay, well, technically maybe. Depends on the time frame. It might be bearish on a 15-minute chart, but it might be bullish on a daily. But statistically, stats are stats. Math is math. And what this chart is saying is in the past, when we got to these levels of price relative to average, price has in the past reverted back to the mean. In the same way that you get in this zone, okay? Meanwhile, literally meanwhile, statistically, that is actually what's happening. That's what it means statistically, that no matter if it's overbought or oversold, we're going in that direction. Okay? And that will continue until it stops. But the way I teach you is I'm trying to remove doubt and I'm trying to add certainty. Okay? Now you can do certainty by, having hard and fast rules where you're like, hey, this is a mean reversion trade and that's that. It might go lower. Oh, for sure. But that's when you stop buying. And you certainly don't buy on the way down, but now you could, if you wanted to, start a base case of reverting back to the mean or really to the top, right? You're doing, right, essentially the full standard deviation where you're buying at the low and you're projecting the high somewhere in the near future. Okay? You're not buying here and projecting here. Okay? You're buying low and you're projecting high. Because you're not trading the average, you're trading the trend. Okay? Okay. FX Exchange says, hey, what does the Fed projections mean to the dollar when they are increased? Well, really, the true answer to that question, because I think you're asking, what does it mean now? But what is it? There's a bigger question. My answer I give you now, if it's just relative to what we have in the moment, next time it happens, it may not have the same impact on the dollar. So really what I want you to look at is not just inflation, okay, but relative to growth, GDP. Now, I might have this mathematically backwards. Is it growth over inflation or inflation over growth? But whatever. I guess it's really not divided by growth, but versus growth or something like that. So I guess, that could just be so grossly wrong. Let me just redo this. Growth. Okay. And let me get rid of this because that might mean something to somebody. What I'm saying is I don't really care about inflation, nor does the Fed really care if we have positive growth. Okay? So the reason for this is that in the past, when growth was, like, I guess you could even say there's no inflation, but growth was falling. Okay, what happened? Okay, so now there's just no inflation. Let's say in the past, 2007, there's no major inflation. Okay, growth was really high. And then we hit the financial crisis, and then growth collapsed. The Fed cut interest rates, right? Right? You following me, FX Chain? Growth collapsed, interest rates collapsed, and what happened to the US dollar? Yeah, you're talking about dot plots. I got you. I understand it. Or you're talking about the shape of the yield curve. Yeah, I get it. It's all ends up being the same thing. What happened to the US dollar when the Fed was cutting interest rates from like 5 all the way down to 0? What happened to the USD? Let me do this in black. USD. What happened to the USD? CF Exchange, you need to join FX Bootcamp and take the course. Because what you say makes sense for every currency in the world except the US dollar. So the Fed cut interest rates all the way down to 0, and the US dollar was unbelievably strong. By far the strongest currency in the world. Okay? Now, we have a different situation. Okay? We still have growth. Although we had a couple of negative quarters, but then we have positive quarters and all that kind of stuff. But let's say we still have growth, but we have a lot of inflation. And the Fed is jacking up interest rates from 0 to 6% probably, 5.5%. Huge, right? Massive. US dollar is unbelievably strong. This is where sort of rules of thumb to try to understand something as complex as global macroeconomics just doesn't cut it. This is where the alpha is made. Okay? And your alpha is your ability to perform better than the risk you take. Okay. Michael's worried. Really? Look at you. Michael, why are you worried about holding trades over the weekend? I worried about that 15 or 20 years ago, but you're worried about gap risk? Oh, you're in some BS prop firm. All right, whatever. No, look, I can teach you how to trade. I can teach you how to do analysis technically and fundamentally. You can learn about monetary policy and its impact on the currency, all that kind of stuff. But yeah, whatever. Yeah, sure, whatever. Yeah, you don't. By the way, I'm not going to put you into trades for you. I'm going to teach you how to trade. So if you don't want to hold trades over the weekend because you're joining a prop firm and they have rules for that, okay, fine. Fine, sure. Okay. So it's interesting. The Fed cut interest rates to 0 and the dollar got strong. And then the Fed jacked up interest rates from 0 and all the way probably close to 6%, and the dollar gets strong. So can you see this issue that I'm trying to explain? Is the interest rate projection what the most important aspect that you're looking at when it comes to predicting the value of the dollar? Well, when the projection was cut it to 0, the dollar went up. And then when the projection is jack it up 600 basis points as fast as you can, faster than any time in history, the dollar went up. So, is it really the interest rate projection? No. It's more complicated than that. So you'll have to learn monetary policy, macroeconomics, and understand these things. I have a love and a passion for it. I have a love and a passion for this stuff. And so when you get this squared away, right, this goes back to FX Exchange, right? When you get this squared away, and you get a bias, like, let me throw this together. Let's talk about, let's say it could be 3 years from now. Let's just say 2 years from now, right? Okay. Let's talk about, let's just say 2 years from now. Okay, remember when the Fed cut interest rates, the dollar got strong, right? Back in 2008. So let's say 2 years from now, the Fed does cut interest rates. I think the opposite will happen than 2008, and the dollar will rally. The dollar will fall. Because it's not the direction per se. It's like, well, what's inflation doing? Inflation in that case would probably be down. Growth would also probably be down. And so if inflation's down and growth is down and the Fed is cutting interest rates down, at some point that will lead to dollar weakness. Now, you might say, and I don't know you, but many people say, dollar would fall because it's bad. No. Stop thinking good and bad. There's not good and bad. In a situation like this, a bottom will occur, dollar will fall, and gold will go up. Okay? The S&P 500 will go up. Oil will go up. Okay? And the USD will fall. Okay? And that I equate to can't get worse. Which is another way of saying good, aka good. And you'll get a recovery trade. But now I'm talking 2024, maybe 2025, probably 2024. So I'm not even going to put that in my 2023 outlook. I disagree with most professional investors. Now, most professional investors were not male supermodels like I was. And I'm using my experience from the catwalk to be able to look at these markets and see them differently. And that gives me my alpha. And I'm 100% certain I'm right. I just now need to confirm or deny all of this using technical analysis. Remember, I use scientific methodology. Okay? I project based on hardcore research. Okay? And then I confirm or deny with testing. Okay? Cool. So I love to learn. I love to test. I love to listen. I'm not here to prove that I'm right. Okay? I'm not here to prove that I'm right. I'm saying that I create hypotheses and then I must test to confirm or deny the hypothesis. And I need to learn as much as possible. I don't have to agree with the rest of the market. I just have to know if I'm right or wrong in my hypothesis. And I think most of the time the market's going to believe what everyone else is saying. I think there's a huge percentage of the market just sits and watches CNBC all day and regurgitates that to their clients. They end up trading the same story. I don't watch TV that way. I don't read newspapers that way. I don't really read other people's research that way. So I end up in my own little world. So therefore, I think what I think, and then I have to test and reflect. But I'm willing to learn. So for example, when I'm in Cuba, I'm meeting with someone who used to run the foreign exchange department for the government of Saudi Arabia and provide their macroeconomic research for the entire kingdom. Not the royal family, because I'm sure there's 1,000 people that claim to do that, but for the actual government. And so I'm going to have an opportunity to learn so much. Wait, you ran the foreign exchange department of an oil exporting nation? That is so fascinating. And macroeconomic back, right? So what did you research? Where did you get your data? What was the goal? What were you guys worried about? What were you confident about? What were you overconfident about? Right? I mean, I'm going to ask a million questions. Huh? Unfortunately, he doesn't smoke cigars. But I'm like, dude, wait, you're Cuban. So how do you get from Cuba to Saudi Arabia? He ran the department for 8 years. You understand? All of a sudden you're like, wait. And my mind's racing, right? I'm like, hey, he doesn't smoke cigars. Is he Muslim? Wouldn't that be? And then like, if you're not Muslim, how do you get to Saudi Arabia? Work at a high level, high responsibility department of the government, and you're not Muslim. That's interesting. How common is that? How uncommon is that? And why did they take a Cuban? And, you know, all of a sudden, like, I got a bajillion questions. It's going to be so awesome. But it's an opportunity for me to, for once, because in our relationship, I seem to do a lot of talking. I can sit and listen for hours on end and learn. Okay. YouTube says, hey, calculus is a wonderful thing, Wayne. Yes and no. But yeah, the rate of change. So I don't know if did I have an impactful. FX Chain was the one asking about the Fed projections, meaning to the dollar. I know I didn't say yes or no, but I pointed out that it's not quite the right question. And I tried to explain why. So I hope that was right. Right? I hope that was an impactful answer ultimately. I think it's too easy to say this equals that. Okay. Yeah, I hope so, Maida. Yeah. Yeah, man. So many. Oh, it'd be so interesting. So again, if anybody knows a professor of economics at the local university, that's kind of who I want to talk to next. So I want to talk to a professor that I want to know about what it's like to, you know, how they organize their lectures. Is it similar to, you know, the style of education that I received in economics. Is it similar? Is it different? How is it similar? How is it different? There's a board somewhere in the United States that is focused on accreditation, and they have to approve, like, if you take an economics class like Econ 101 as a freshman in college, someone has to oversee the course content to make sure it meets the standards of accreditation. Like, how does that work in Cuba? All that kind of stuff. Again, the overview of what's good and bad, right or wrong. How is that similar? How is that different? Do they teach sort of the free market enterprise is bad? I mean, look, there's lots of flaws to capitalism. I'd love to hear every single one of them and how it's taught and how I'd love to be invited to do a guest lecture at the university. Like, my God, wouldn't it be great? I can go twice a year to do a guest lecture, right? And the Universidato, I don't even know, Universidato de la Habano. Yeah, like, dude, I would love to do that. Oh my God. And I've been to, communist China and not communist Russia, but I've been to Russia. So, boy, I'd love to have someone to tell me how Universidad, that makes sense. Universidad. Yeah, Universidad. Yeah. Anyways, so I geek out on this stuff, but I think you have to. Okay? I think you have to. Or if you really want to be a success at this game, I think you want to be at that level. And if you want to raise money, like we're talking about that, like one day you want to raise money. If I dropped a story, because remember, it's all about stories, right? And I'm meeting with a potential client. We're having dinner and we're talking about things. Look, my Sharpe ratio is good enough. My returns are good enough. That's not why people invest, is it? They're having dinner with you because you're at least good enough. And then you drop a story like, well, when I was in Havana, and they're like, wait, you went to Cuba? Oh, yeah. I thought you lived in the United States. Oh, I do. Well, how'd you get to go? Well, I'm a Harvard trading economist doing research for my book on macroeconomics. I'm also putting together a course to teach at Harvard. Oh, yeah. And you're like, oh man, you should go if you get an opportunity. The hotel is amazing. All these JFK stayed there. Winston Churchill has stayed there. Even Vladimir Putin was there a few months ago, right? Oh, cool. Like, oh my God, right? So now you got a good story. And then you met with this guy who ran the foreign exchange and macroeconomics department for the Saudi government. And here's what we talked about. And all of a sudden, like, you're going to get the money, don't you think? Oh, thank you, Elton. But like, isn't that what gets the investment? Like, you're good enough. But you're like, you do that? Yeah. That's what the Wayne do. And yeah, and you stand out as being not just competent, but different and better. So yeah. And all I'm doing is listening. Cool. All right, so let's do some exotics. And we had that pullback. Remember, we talked about it. And now it seems, it seems to be trying to make the lower low, which is good. What do you think? What do you think? Well, what was the goal? When I took the trade, the goal, and I think it was in the swing trading group, is to hold the trade for a long period of time. Cool. Now, if I'm lucky, okay, by the end of January, if I'm lucky, and look, I think there's a real threat around 19. But if things continue, and the trick here is, I believe dollar is going to get strong very, very soon. Well, that pushes this up, and that knocks me out. Okay. Okay. The second part is this trade, not just this trade, this chart, even in periods when the dollar was strong, the Mexican outperformed. Gee whiz. That's a conundrum. When the dollar was strong, the Mexican peso was even stronger. Wowzer. So I don't know what to think on that one. I do know, or I do believe the dollar gets strong, but does the Mexican peso stay strong? Or does the peso collapse because the U.S. economy is going to collapse and they're going to do less business with Mexico? Meanwhile, Mexican Americans lose their jobs. Meanwhile, illegal Mexican workers in the U.S. economy go home. And there's no need for repatriation, right? So all of a sudden, maybe that whole thing collapses. So, at some point, I will have to move my stop. So like if I put my stop right here, let me get it precise. There we go. Okay. If I move my stop right here, based on the first part, which is asset appreciation. Okay. Okay. Appreciation of the asset value, we'll say. Okay. I make 200%. IRR. How do you define internal rate of return? Yeah, it could be foreign direct investment, but if CapEx in the United States starts falling, well, then FDI is going to fall, right? What is IRR? What does the internal rate of return mean? How about this? Type in a question mark if you don't know. Probability of an investment? Nope. Yeah, I think we're going to have a nice run at it, Greg. And then I think it'll be choppy, but I think we'll have a good run. It's not ROI. No. Okay. It's per dollar. Okay. So think of it this way. I invested $100. I get $200 plus my original $100 back. So it's like I put $100 in and then I get $300 back minus the 100. I'm left with the 200. Okay. So that's right. For the risk, right? So in this case, the margin used to purchase 10,000 US dollars of Mexican peso, I put up $100. Okay. So the internal rate of return on that, based on this stop loss here, the worst I can do now is 200%. However, I also earn income. This is currently at 60%. So if this if this jumped today and knocked me out, I'd have a 200% internal rate of return based on the asset's appreciation and value. Okay? But I'm collecting interest every day for the last 2 months, which is now currently, I've earned more than $60 in income from a $100 investment. So I can get a total, right? You get it? So this is a swap trade. Well, it's one of the rationale for sure. Because remember, when we took the trade, it had to do with how do you stay in a trade for longer? Well, why do you want to stay in a trade for a long time? Well, you either want to capture asset appreciation, income, or both. Now, you might find the asset appreciates in value, but what if you lost because it had a negative swap? Well, you're like, well, even after I pay for my negative swap, I'm still going to be up 140%. It's worth it. Okay? But it's part of the decision-making process for sure. Okay? And you can see it's actually 66%. And if I got out right now, I would have 300%. You see? So in reality, this currently, if I exited right now, is 300%, and this is actually 66. I can get out right now for 366% internal rate of return. Is that a good use of the money? Sure. Now, what if I had, let's say my leverage is 100 to 1. What if I use 50 to 1 leverage, like that's required inside the United States? Okay. Then this is going to be 150, isn't it? But I'd have the same income. See how leverage impacts the internal rate of return? It's one of the things you have to consider. So now we're talking finance. This is something you study in finance. And for example, what size mortgage should you take on your apartment building? Well, the bigger the mortgage, the higher the internal rate of return, but the faster you can get into trouble. So let's say 5 years from now, interest rates are higher, or the value of your property is lower, or of course, the coup d'etat is both. Imagine you have a mortgage, okay? Mortgage. Okay? And then, and we'll call value and interest rate. Okay, cool. So in year 1, and we'll do 1 and 2, probably have this backwards, but anyways. Okay, in year 1, year 2, yeah, I can't do it wrong. Sorry. Just like the other one, I can't do it wrong. Okay. It's year 1 and year 2. And we'll have the value, sorry, and the rate of the mortgage. Okay. So, and this isn't 2, this is in year 5. Okay. Because commercial mortgages are amortized as if they're 30-year mortgages, but they have to be renewed every 5 years. It's weird. It's not like your house. Similar, but not different. All right. So let's say in year 1, the property is appraised for $1 million, and you're able to borrow money at 5% from the bank. So you take out a big amount, okay, because it increases your internal rate of return. But 5 years from now, if they appraise it at $900K and interest rates are at 6%, guess what? You might not have enough equity to afford this apartment building, and you'd be forced to sell it. You borrowed too much. So now you got to go back and say, you have to look at your leverage ratio, okay? And start doing calculations of what is the appropriate level. Because to increase your internal rate of return, like imagine my internal rate of return, if I made $366 from $10 because I'm leveraged 1,000 to 1. So you're like, Wayne, you're a genius. Look at your internal rate of return. Yeah, well, it's because I'm ridiculously over leveraged, right? And what happens to over leveraged people? They get forced to sell out of their positions for a loss, and they're screwed. So it's not necessarily better, but that did happen. That is happening right now, good or bad. Okay. That's what this trade is doing, but that's how you should look at it. And what I'm trying to express here is why you can look at somebody's trade history and simply look at their absolute return. And it's not good enough to decide whether you should invest or not. And that's why we look at internal rates of return. That's why we look at Sharpe ratios. That's why we look at, because we're trying to figure out levels of leverage, levels of gambling, levels of luck. All of this needs to be calculated out. And if, and you're like, but Wayne, I only got a $10,000 account. I'm trying to attract investors to give me 25 grand. So I'm going to talk to, retired doctors and stuff like that, small-time amateur investors. Yeah, but if you ever want to become a better trader, then you have to understand, and that's all I'm trying to share. To me, it doesn't matter if you only have 10,000 and you're only going to talk to your mom's masseuse. And borrow money or trade their money, right? But look, you need to be the best you could possibly be at the very beginning. Don't you think? And I'm telling you, your track record should be beautiful. And I'm not talking about your ROI, your absolute money, right? We want to look at low volatility, low risk. We want to see consistency. It's beautiful. Okay? If people actually listen to me, you would show your track record to a professional investor and they'd be amazed. Not because you turned $1,000 into $1 million. It would just look beautiful. Oh my God, I've never seen anything like this. Boop, 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 boop. All right, well, I got to go. I have a meeting with a hedge fund in the Caribbean. So I got to go do that. Thank you for being here. If you're part of FX Bootcamp and a member of my swing trading group or day trading group, we are meeting today for the last meeting of the year at 4 p.m. And I'm really looking forward to it. So, right? Actually, his is in the Bahamas. Yeah. 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 The management firm is Canadian. The fund is in the Bahamas. Yeah. Y'all. Yeah. So anyways. So peace on earth. May the pips be with you. May your profits be above average. By the way, thank you for hanging with me during the holidays. You probably have found the market slow and all that. Hey, but we're here. We're here. So anyway, I hope you've had good holidays. Like I said, I hope you've had an opportunity to spend time with your family and all that kind of stuff. We're getting to the new year, and this is a time for you to be thinking about the future. And so very soon we're going to be in 2023, and I plan on trading it. So I hope you're here with me. Today we are going to cover in the meeting next week, next month, next quarter. It's all real. It's not some esoteric discussion about what could happen in the future. The future is now. Super cool. So I'm super excited. Thank you for being in my life. Thank you for all your contributions to the community and your positive energy. Peace on earth. May the pips be with you. May your profits be above average. And of course, I'll be here tomorrow too. So, but hopefully I see everybody at 4 p.m. Remember, all you have to do is join FX Bootcamp and then upgrade to the swing trading group. Bootcamp is $88 a year for 88 hours of training. And then the swing trading group, which meets twice a week, is only $99 a month. It's not terribly expensive. Like everyone here should be in today's meeting, in my humble opinion. Cheers.